So now we're going to take this same problem and we're going to calculate FIFO. I said to you, FIFO is first in, first out. Just look at and try to remember F for first, L for last. LIFO, last, FIFO, first. FIFO says the first item in comes out first. And again, when you employ LIFO or FIFO, you have to know the number of units sold. And in this problem, the number of units sold was 15. Where did I get it from? Here. We sold on June 10th, 15 units. We had 20 units available to sell. We sold 15. We ended up with 5 units left in ending inventory. So FIFO says the first item in comes out first. What's the first item in? Beginning inventory. So we're going to quickly take 6 at 305, which gives us 1830. And then we're going to take 9 at 317. Now, why are we only taking 9? Why we're not taking the full 10? I'm going to give you a minute just to clear that up. Why are we taking the 9 and not the full 10? The reason why we're taking the 9 is because we need 15 units. We need this to match with this, which matches with the number of units was sold. So now that we do that, we get 2853. And then we add the 2853 plus the 1830 to get 4683, which is our FIFO, very important to label it, cost of goods sold. This is FIFO, cost of goods sold in dollars, 4863. Once we determine FIFO, cost of goods sold in dollars, we take the goods available for sale in dollars, which is 6,400. We minus the FIFO, cost of goods sold in dollars, which is the 4683, and then we get what's called FIFO, ending inventory. Look at the problem. We take the goods available for sale in dollars, which is given. Goods available for sale in dollars is given. In the problem, we subtract out the FIFO, cost of goods sold, which we just calculated, and we get 1717, which is our FIFO ending inventory. Simple as that. LIFO, we started in at the bottom, worked our way up to 15 units. FIFO, we started in from the top, worked our way down to 15 units. Once we arrive at the 15 units sold, we're done for the cost of goods sold calculation. Let's finally now look at, let me do a quick summary, and then let's finally now look at weighted average. So our FIFO cost of goods sold was 4683. Our LIFO cost of goods sold, as we calculated previously, and then we can look down here and it'll show us our LIFO cost of goods sold was 4875. All right? Now we're going to do what's called weighted average. Weighted average is pretty simple. All you're taking is the weighted average cost divided by the number of units. All you're doing is taking the weighted average cost and dividing it by the weighted average number of units. And you get the cost per unit. So you're taking the 6,400 and dividing it by the 20 units in goods available for sale. You're taking the $6,400 of goods available for sale and dividing it by 20 units to get the weighted average cost. And that gives you $320. Your weighted average cost, and you can do it the same way by just adding all of these up and dividing it by 3. You'll get $320, essentially. $320 is our weighted average cost per unit. This is the cost per unit. Weighted average. $320. Now that we have the weighted average cost per unit, all we have to do is multiply it by the number of units sold to get the weighted average cost of goods sold. So if we need to get weighted average cost of goods sold, we're going to take 320 times 15, and that should give us the weighted average cost of goods sold. 320 times 15 is 4,800, and that's our weighted average cost of goods sold. So now we got all three. We got LIFO, we got FIFO, we got weighted average. And I already know that if you wanted to calculate, again, using the same scenario, what was our weighted average ending inventory in dollars, we would take the goods available for sale of 6,400, subtract the cost of goods sold for weighted average of 4,800, and that will give us the weighted average ending inventory of that difference of 1,600. But I want to focus in now on the second part of this problem. And the second part of this problem is calculating gross profit under the 3 valuation methods. Calculating gross profit under the 3 valuation methods. And that's what we're going to spend time on now. This problem says the selling price of every bike is $450. Why is that important? That means every bike that I sold, I charge the customer $450. Now, you look at this problem, this is what it cost me here, this is what it cost me here, this is what it cost me here. I'm not selling it for that price. I'm selling it for this price. Regardless of what I purchased it for, this is my selling price. All right? So if I need to calculate total sales, how will I do that? If I need to calculate total sales, how do I do that? If I'm calculating total sales in this problem, my total sales in this problem is going to be the $450 times $15, which is $67.50. Whether I'm using LIFO, FIFO, and weighted average, my sales is regardless of the methodology that I use, my sales is going to be the same. Regardless of the methodology that I use, my sales in dollars is going to be the same. It's going to still be $6,750, regardless of the methodology. How did I get that $6,750? I got $6,750 by taking 15 units sold by a weighted sales price of $450. 15 times $450 gave me $6,750. That represents the total sales price. Whether I use LIFO, FIFO, and weighted average, that sales price will be the same. Now we can employ, if you will, LIFO, FIFO, and weighted average. LIFO was $48.75 for cost of goods sold. FIFO, weighted average, was $46.83. The weighted average cost of goods sold was $4,800. And then as you can see, guys, our gross profit, remember gross profit as we used it in the multi-step income statement, and we're doing it again here, our gross profit now, represents sales minus cost of goods sold. So in a LIFO situation, we get a gross profit of $1,875. And then in a FIFO situation, we get $2,067 as our gross profit. And then finally, in a weighted average situation, we get $1,950 as our gross profit. As you know, gross profit is sales minus cost of goods sold. As you know, gross profit is sales minus cost of goods sold. So we clearly, in all of these situations, can calculate our gross profit using the three valuation methods. And as you can see, as prices are rising, went from 305 to 317 to 350, which one of those methods gives us the higher gross profit? FIFO does. Which one of those methods gives us the lower gross profit? LIFO does. So when prices are rising, FIFO will give us a higher gross profit because the cost of goods sold would be lower, and LIFO gives us a lower gross profit and thus a lower tax liability. Remember, your tax liability is based on your profit. So when prices are rising, LIFO will give you a lower tax liability. On your test and your quiz, you're going to need to know how to calculate LIFO, FIFO, and weighted average in terms of cost of goods sold and ending inventory, and also calculate gross profit under the three valuation assumptions. Review this, take the time to go over it. We will assign problems concerning it, and you'll learn it very quickly.